So I'll do guest, let them in and all that.
Okay, thank you.
Yeah, they say that.
Okay, right. Right, okay, guys, let us get going with this class quickly. Our class for today, which is lecture number 5. Now, I have sent you guys the notes for lecture 5 via emails. If you haven't got the lecture 5 notes, then on your screen, you can click onto Teams. And if you click onto Teams, there will be an icon that will show you files. And I have loaded the information on lecture 5 there on. So you can download that and print it because I am going to lecture from that particular set of notes. Right, now in our last lecture, which was lecture 4, we discussed the financial statements with a focus more on the actual formats of those financial statements. Now, when we talk about the financial statements and the drafting of the financial statements, we are referring to you must be able to draw up the 3 financial statements. So the 3 financial statements is the statement of profit and loss and other comprehensive income, the statement of changes in equity, and the statement of financial position. Those are the 3 financial statements that you must be able to prepare. The information that is necessary to prepare those financial statements is that in a question, they will supply you with a trial balance and additional information. The additional information, which is our adjustments, has not yet been recorded in the books of the business. Therefore, whenever you are dealing with your adjustments, there are first of all journal entries that will apply to those adjustments. So now on page 1 of the notes, let us just take a look at the actual adjustments and how to record these adjustments then in the books of the business. The first adjustment that we're going to deal with is the adjustment accrued expenses. Now, when we speak about accrued expenses will occur when you will have expenses at the end of the financial year that has not yet been paid. Examples of that could be that the business didn't pay the telephone account in the month of December, if your financial year end is in December, and you will then actually only pay that now during the month of January. And that is then an example of accrued expenses. Now, accrued expenses is classified as a liability because you are still owing the money. You didn't pay the expense at all. So, to record the entry in the journal, accrued expenses, which is a liability, must be credited. And then you will debit all the other accounts. For instance, if you didn't pay telephone, you debit telephone and you credit accrued expenses. If you didn't pay your water and electricity, you debit water and electricity and you credit accrued expenses. If you didn't pay salaries, you debit salaries and you credit accrued expenses. So all the expenses are debited because your expenses increase. You will have more expenses, more than what is actually projected in your trial balance. And you credit your account accrued expenses. Now, each adjustment will impact on either the statement of comprehensive income or the statement of financial position. If you are dealing with accrued expenses, the impact on your statement of comprehensive income is that your expenses will increase. So, example, if your trial balance showed telephone as 5,000 Rand and you didn't pay 500 rands worth of telephone in the last month, then your expense in your statement of profit and loss and other comprehensive income, that expense is then the 5,000 plus the 500. So you will show 5,500 as your expense. So your expense will increase. And the impact on your statement of financial position is that accrued expenses, remember accrued expenses is a liability. You didn't pay it. You are owing somebody money, and that amount you will show now under your current liabilities. Under your current liabilities, as part of your trade and other payables, you will show the amount of accrued expenses. Okay, that is the first adjustment. The second adjustment that you can get is what we call prepaid expenses. Prepaid expenses will occur when we've got the situation whereby we have paid an expense for this year, but the expense is actually for next year. An example of that would be your insurance expenses. If you pay insurance in December, you actually pay your insurance for January, because insurance must always be paid in advance. So that is classified as a prepaid expense. So if we are saying, and we go back to the notes now, if we are saying we are dealing with prepaid expenses, remember that prepaid expenses is classified as an asset. Therefore, you will debit your account prepaid expenses and you credit your expense account. You credit your expense account because you will have to decrease your expenses. Your expenses is too much in your trial balance because you have paid for the following year as well. So in order to see what is the actual amount of expense for the year, you will have to decrease your expenses in your statement of profit and loss and other comprehensive income. So the journal entry, just to come back to the journal entry, you debit your account prepaid expenses and you credit your expense account. So if you have paid rent in advance, you will debit prepaid expenses and credit rent expense.
Excuse me.
Yes.
Sorry to disturb. I'm not able to access the chat because it says I've joined as an attendee and I need to add somebody before I'm able to join in on the chat option. And
okay, somebody will sort. Okay, somebody will sort you out right now. Okay.
Thank you, sir.
Okay. Right. So just to get back to our notes, I hope all the other guys are okay. You can follow what is happening. Okay, right, guys. I'm continuing. I'm still busy with our adjustments. The second adjustment I dealt with is the adjustment for prepaid expenses. So, as said earlier, to record this in the books of the business, you debit your prepaid expenses account and you credit your actual expense. So if you have paid rent in advance, debit prepaid expenses, credit rent. Okay. If you have paid wages in advance, debit prepaid expenses and credit wages. If you have paid insurance in advance, debit prepaid expenses and credit insurance. The impact on your statement of profit and loss and other comprehensive income is that you must decrease your expense. So in the amount in the trial balance for insurance is 6,000 Rand, but 1,000 Rand of that is a payment for the following financial year. Then the expense for the current year is not 6,000 as in the trial balance, but 6,000 minus 1,000. Only 5,000 will appear then as your expense for the year. And then in your statement of financial position, prepaid expenses is part of your current assets. So under your current assets, remember, there are 4 categories of current assets, being inventory, trade and other receivables, prepaid expenses, as well as cash and cash equivalents. So the amount of prepaid expenses will appear under the line item for prepaid expenses. Right, adjustment number 3. We take a look at the third adjustment. The third adjustment is when we deal with accrued income. Now, accrued income will occur when you were supposed to receive money for the current financial year and you did not receive that. Examples of that would perhaps be where we've got the situation whereby the bank was supposed to pay you interest and the bank didn't pay you interest on a fixed deposit. Or you were supposed to receive rental, but you did not receive it. That was money that was due to the business in the current financial year, and it was not receivable. It is still accrued at the end of the year. So we are still waiting on that money. That is classified as accrued income. Accrued income falls under your category of assets. Accrued income is an asset. Somebody is owing you money. It's like a trade receivable. If somebody owes you money, we classify that as an asset. To record that in your journal, you will debit accrued income. Assets increase on the debit side, as you may recall, and we credit the income account. So if it is rent income that is still outstanding, debit accrued income, credit rent income. If there is interest on fixed deposit outstanding, debit accrued income and credit your account interest on fixed deposit. The impact on the statement of comprehensive income is that you must increase the income. Remember, in your trial balance, you have only received a certain amount of money. Now there's more outstanding. So if you want to reflect what is the income for the year, you will have to increase the income. And then on your statement of financial position, in your statement of financial position, accrued income is classified as an asset. It appears under your current assets together with your trade and other receivables. Right, guys. Additional, or when we take a look at adjustment number 4 now. Adjustment number 4 deals with income received in advance. Now, income received in advance will occur when the business has received money during the current financial year, but it is actually for the next financial year. It's the next financial year's income that you receive during the current year. An example of that will, of course, be when we get the situation whereby the tenant who is supposed to pay us rent, he has paid the January rent to us during the month of December. So we are working with a financial year that has ended the end of December. But if you have received January's month or January's rental during the month of December, you have actually received money too much, and that is then classified as income received in advance. Now, income received in advance is classified as a liability. So if you are going to record the entry in the journal, liabilities increase on the credit side, you will credit your account income received in advance. And your income account must be debited. Now, because you debit your income account in your statement of comprehensive income, your income, like rental income, is too much. Therefore, it will have to decrease. And in the statement of financial position, income received in advance appears under your liabilities. So under your current liabilities, you will state the amount of income received in advance. All good? Right. We are back now, guys, to our notes, and we take a look at our next adjustment. Our next adjustment is where we work with additional credit losses. Now, when we speak about additional credit losses, we say that we may have the situation whereby we've got credit losses for the entire financial year. Debtors, our trade receivables, that has been written off already during the course of the year. Now, we've got more credit losses. So if we have got more credit losses, your credit losses will increase. And to record that in the journal, you will have to debit your credit losses and you credit your trade receivables, your debtors. You are decreasing your debtors. Therefore, your trade receivables must be credited. The impact on your statement of comprehensive income is that you will have more credit losses. Your credit losses, your expenses will increase. And in your statement of financial position, your trade receivables under your current assets, you will have to decrease those amounts. Okay. Right, guys, we're almost done with the adjustments. The next adjustment is what we call consumable inventory on hand. Now, when we talk about consumable inventory, guys, it is the expense, the consumable item that we still have on hand at the end of the financial year. There may be stationery on hand at the end of the year, or there may be packing material that you will still have left at the end of the year. Now, those items, the stationery and the packing material, are classified as consumable items. Now, at the end of the financial year, if you bought stationery for 1,000 Rand and there's still 200 Rands worth of stationery left at the end of the year, that 200 Rand, that is the consumable items that is on hand, because you have used up 800 Rand of the 1,000. So if we are now going to record this adjustment in the books of the business, in your journal, you will have to debit the inventory stationery account, because inventory is classified as an asset. You debit the asset account and you credit your stationery account. Stationery is an expense. You will have to decrease your expenses. So when you do your statement of profit and loss and other comprehensive income, your expense for stationery will not be 1,000 Rand, as in my example, but only 800 Rand, because you have still got 200 Rands worth of stationery left. And in your statement of financial position, under your current assets, remember you've got 4 categories of current assets: inventory, trade and other receivables, prepaid expenses, and cash and cash equivalents. So under your inventories, you will show your consumable inventory on hand, which in my example is the 200 Rand that is still on hand. We take a look at our last adjustment that we will deal with for today, and that is the adjustment called depreciation. So when we talk about depreciation, as you guys may know, depreciation is classified as the value in which our non-current assets, mainly your vehicles and your equipment, your furniture, how those items will decrease in value over time due to wear and tear. So due to the wear and tear, the value of our non-current assets will decrease over time, and that is what is classified as depreciation. Now, just a little bit further down on your notes, I've now explained to you guys what is depreciation. The methods of calculating depreciation, there are basically two methods that you guys must be able to use whenever you do exams. The first method is called the cost price method, or sometimes also called the straight line method. In this method, we are having to calculate the depreciation on the cost price of the asset. So it is a fixed percentage based on the cost price of the asset. So you need to go to the actual question paper and see what is the cost price of the asset. Look for the rate of depreciation, which may be 5% or 10% or 12% or 20%. And you take that amount and you calculate that on the cost price of the asset. And that will give you the calculation for depreciation. It's a fixed percentage on the cost price of the asset. The second method is called reducing balance method or diminishing balance method. With the reducing balance method or the diminishing balance method, you must first calculate what is the carrying value of the asset. Carrying value? Carrying value means cost minus accumulated depreciation. So go to your trial balance, take a look at the cost, take a look at accumulated depreciation, calculate the carrying value, and carrying value is cost minus accumulated depreciation. I will show that to you guys when we do the example later on. So you will calculate the carrying value first, and once you got the amount of the carrying value, which is cost minus accumulated depreciation, you take the percentage on that, and then you apply that is how you will calculate the depreciation. You apply the rate of depreciation in the question paper to the carrying value. And remember, diminishing balance method, first calculate the carrying value, which is cost minus accumulated depreciation. Once you've got that amount, you take the percentage on that amount. Right, that is as far as the calculation is concerned for depreciation. But how do we record depreciation? Depreciation is an expense in the business, which means that you've got more expenses. So you debit your depreciation account and you credit the account accumulated depreciation. So if it is on vehicles, debit depreciation, credit accumulated depreciation on vehicles. If it is equipment, debit depreciation and credit your accumulated depreciation on equipment. That is your entry in the journal. You have to bring into account the depreciation. Now, the impact on our financial statements. In the statement of profit and loss and other comprehensive income, depreciation is an additional expense. We will have more expenses. And in your statement of profit, in your statement of financial position, accumulated depreciation, there's more accumulated depreciation because every year's depreciation gets added onto accumulated depreciation. And so your accumulated depreciation will increase. Okay, guys, that will take care of our adjustments. In your note on page 2, I have got there for you on top there, the first bullet, the actual entry and how to record the entry in the general journal for depreciation. You debit the depreciation account, you credit accumulated depreciation on vehicles, and you also credit accumulated depreciation on equipment. Guys, I'm going to take you through an example now on page 2. And the example on page 2, guys, is just to get you into the calculation and the recording of your depreciation. So in the example, the following information was taken from the books of VW Traders on the 28th of February 2019, which is the last day of the financial year. And in your notes, you can see there that they give you the trial balance. They give you the balance of land and buildings, the balance of equipment, the balance of your vehicles at cost, and there's also the balances there of your accumulated depreciation. Now, let us take a look at the adjustments there. In your adjustments, they are telling you, adjustment number 1, provide for equipment on 10% on the reducing balance method. Remember now, when we talk about reducing balance method, you must first calculate the carrying value. So in your reducing balance method, when you apply the reducing balance method, first calculate the carrying value. And your carrying value is equal to the cost price minus your accumulated depreciation. So if you want to calculate the carrying value from your question, the cost price of equipment is 126,000. Accumulated depreciation on equipment, go to that amount, that is 42,000 Rand. Remember, we are busy with the diminishing balance method. We must first calculate the carrying value, which is cost minus accumulated depreciation. It is 126,000 minus 42,000, and that will give you 84,000 Rand as your carrying value. Now you must take 10%. Your depreciation rate is 10%. So if you want to calculate the depreciation, it will be equal to 10%, 10 divided by 100 times the 84,000, which is the carrying value, and that will give you a depreciation expense of 8,400 Rand. So if you want to calculate your depreciation on the diminishing balance method, you must first calculate the carrying value. Go to the example. Carrying value of equipment is the cost of 126,000 minus the accumulated depreciation of 42,000, and that will give you a carrying value of 84,000. You apply the rate of depreciation, which is 10% on that amount, and that will give you depreciation of 8,400 Rand. The second bullet asks you to calculate the depreciation on your vehicles. And the depreciation on vehicles must be calculated at 10% per annum. No, I'm sorry, it's 20% per annum on the cost price of the vehicles. So what you do with the vehicles is that you go to the cost price of the vehicle, and the cost price of the vehicle is 320,000 Rand. You take the 20% of that amount, and that will give you depreciation for the year. Take the 320,000. Take your 20% on that, and that will give you depreciation of 64,000 Rand. So we have now calculated the depreciation on equipment on the diminishing balance method, and we have calculated the depreciation on the vehicles, and that was also then, but that was then again on the cost price. So I've showed you now the calculation of those depreciation. Now I am going to record this entry now in the journal. To record this entry in the journal, I debit my account depreciation. Remember, depreciation is an expense. I will have to debit that account. I credit my account accumulated, which is spelled wrong there. I credit my account accumulated depreciation on equipment. And I also credit my account accumulated depreciation on the vehicles. My accumulated depreciation on equipment is going to increase with my expense, and my expense for equipment is 8,400 Rand as we calculated earlier. The accumulated depreciation on vehicles will increase by 64,000 Rand because we calculated 64,000 Rand as our accumulated depreciation on vehicles. So the total expense for depreciation, our total expense for depreciation will then be 72,400 Rand. Okay? And that is the entry in your journal. The entry in the journal to record the depreciation. Debit your depreciation account, that is your expense for the year, and the expense for the year will then be the 72,400 Rand. And you credit accumulated depreciation on equipment, 8,400, and accumulated depreciation on vehicles, 64,000 Rand. You must be able to calculate the depreciation, and you must also be able to record the depreciation in the journal. Okay. On page 3 in the notes, guys, page 3 in the notes, we take a look at an example here of a question paper. We are on the October-November 2012 paper. We are doing, it's question 3 of that exam paper, and we are doing the books of the business called Orange Traders. Once again, a trial balance is given to you. Now, in your trial balance, that is a summary of all the transactions that has actually been recorded in the books of the business for the entire year. And they also give you additional information. Now let us take a look at the additional information. Additional information is actually your adjustments. So, adjustment A. They tell you the inventory on hand on the 29th of February, the inventory on hand at the end of the financial year consists of trading inventory of 12,800 and stationery of 345 Rand. So let us just discuss this quickly. Your trading inventory of 12,800, that is your closing inventory, your closing stock at the end of the year. Your stationery on hand of 345 Rand. Remember in our earlier discussion, we discussed that stationery and packing material, if it is still on hand at the end of the year, will fall under the category of consumable items that is still on hand at the end of the year. So that is as far as your stationery is concerned. The second adjustment, go to B. B tells you that the insurance amount of 2,400 Rand includes a premium of 200 Rand for March. This is for March 2012. But your financial year ends the 29th of February 2012, and you have already paid for March. Now, because you have paid for March, that falls under the category of prepaid expenses. So, insurance, adjustment B, that is called prepaid expenses. Now, you must actually now take a look at how did we deal with prepaid expenses under your adjustments. But what is important is that you must be able to identify that insurance is a prepaid expense. I am on to C. I am on to C now. C speaks about the loan. And the loan was obtained from Africa Bank on the 1st of September 2011. So go to your loan account and you see that there is a loan from Africa Bank, and the loan from Africa Bank has got a balance of 50,000 Rand. Now that loan from Africa Bank of 50,000 Rand was taken out on the 1st of September 2011. And the 1st of September 2011 is still during the current financial year. Because your financial year has started on the 1st of March 2011 and has ended the 29th of February 2012. So that loan was taken out during the course of this year. And the interest on the loan, we haven't paid it yet. It is an expense which we haven't paid so far. We haven't paid that expense in this year. And that will fall under the category of what we have discussed under our adjustments. That is an accrued expense. It is something that we haven't paid yet. We were supposed to pay it, but we haven't paid it. Accrued expenses. Importantly, you must now identify that interest on loan is accrued expenses, and you must know how to deal with accrued expenses. I'm on to adjustment D. The rent income for February is still outstanding. Rental, guys, rent income. We haven't received the rent as yet. This falls under the category of accrued income. It's income that we were supposed to receive. We haven't received it yet. We speak about accrued income. And then E, guys, adjustment under E. E is just dealing with depreciation. Once again, you must calculate depreciation. Take a look at the depreciation on vehicles. They tell you that the depreciation on vehicles must be calculated at 20% per annum on the diminishing balance method. Remember now how we discussed diminishing balance. With the diminishing balance, remember you must first calculate the carrying value, which is cost minus accumulated depreciation, and then you take the percentage on that. The depreciation on furniture and fittings must be calculated at 10% per annum on the cost price. So you will just take 10% of your cost price and then you will record that in there then. Okay. So that is just an explanation of the additional information. Let us take a look at what the question wants you to do as far as your required is concerned. As far as your required is concerned, the question wants you to actually do, first of all, record the adjustments in the journal, and thereafter the question wants you to record the entries now or to complete the statement of profit and loss and other comprehensive income. Right, guys, I'm just going to do that for you. Okay. Okay, guys, I will just have to make a move here. So let us take a look at the first adjustment under A. Okay, first adjustment under A. And in that adjustment, we are saying we have got stationery on hand of 345 Rand. To record that in the journal, I debit my account inventory, which is spelled wrong. Okay, inventory stationery, and I credit my stationery account, and the stationery on hand is 345 Rand. So that is the first journal entry under A. I've got consumable stores on hand, and my consumable inventory that I've got on hand, in this case, is the stationery that I've got on hand. Right. The second adjustment, guys, second adjustment is dealing with the insurance amount. Now, we discussed earlier that our insurance, 200 Rand of that insurance has been paid for the month of March 2012. We classified that as prepaid expenses. Prepaid expenses is an asset. I debit my account prepaid expenses, and I will decrease. I will have to credit my account insurance, and the amount is 200 Rand. Only 200 Rand of the payment is for the next financial year. So even though we have paid 4,200 Rand for insurance, our insurance, we have paid 2,400, 200 Rand of that is for the next financial year, classified as prepaid expenses, and that is how you will record that entry in the journal. I'm on to C now. We take a look at C now. How are we going to record the information of C now into our general journal? We're speaking about a loan here, and we haven't paid the interest on this loan as yet. And because we haven't paid the interest on the loan as yet, we must record the interest on the loan. We haven't paid it, and therefore it is classified as accrued expenses. We haven't paid the expenses. We haven't paid the loan for the year. So at the end of the financial year, we still owe that amount. Under our adjustments, this will fall under the category of accrued expenses. And accrued expenses is classified as a liability. So to record this in the books, in the general journal, debit the expense account, interest on loan, and you credit your account, accrued expenses. Now, guys, let us quickly calculate here. What is the amount of interest on loan that we are supposed to pay? The interest on loan, guys, remember now, we have got 50,000 Rand loan. The interest that we must pay is 12%. You will get that information in your trial balance. But the loan was taken out during the course of the year. The loan was taken out on the 1st of September. So we only had the loan for 6 months. Therefore, calculate the interest on the loan. It is the 50,000 times 12% times 6 months divided by 12, because the loan is only for 6 months. And that will give you interest on loan of 3,000 Rand. there's 3,000 rands worth of interest that you didn't pay. That is the amount that is due. So we will have a new expense called interest on loan that must be debited, and we credit our account accrued expenses, 3,000 rand. Just make sure that you know how to do that calculation. The loan was taken out during the course of the year. We are still owing the interest. We haven't paid the interest. That is called accrued expenses. And the calculation, 50,000 rand was the loan. The interest rate is 12%, and we didn't pay it for 6 months. And therefore, your amount that you owe in interest is 3,000 rand. Right, guys, I'm on to my next adjustment now, the next one. And the next one deals with the rental. Now, as far as our rent is concerned, guys, the adjustment tells you that the rent for February is still outstanding. So we have not received the rental for the month of February. That is classified as accrued income, which is an asset. Somebody is owing us money. Debit your account accrued income, and you credit your account rent income. The amount, guys. If you go to your trial balance, you will see that the rent income is 3,300 rand. But as you may know, there's 1 month rental that you have not received. So you need to understand that that 3,300 that you see in your trial balance is the amount of money that you have received for 11 months. 1 month is still outstanding, so you have received it only for 11 months. So you take the 3,300 and divide it by 11 to get 1 month's rent. And then you will see that the actual rent income per month is 300 rand. So if you haven't received 1 month's rental, debit your account accrued income, and you credit your account rental income 300 rand. All clear on that one? Happy with that calculation? Right, the last adjustment that must be recorded in your journal is your depreciation. You've got depreciation on vehicles, and you have got depreciation on furniture and fittings. Let us first deal, guys, with the actual calculation of the depreciation. The depreciation on vehicles must be calculated at 20% per annum on the diminishing balance method. So what does diminishing balance method mean? As discussed earlier, diminishing balance method means first calculate the carrying value. Now, if we want to know what's the carrying value of our vehicles, it is equal to the cost price of the vehicles minus the accumulated depreciation. If you want to calculate the carrying value of the vehicle, the cost price of the vehicle, go to vehicles at cost, and vehicles at cost is 120,000 rand in your trial balance. Accumulated depreciation on vehicles is 54,700 rand. So you must first calculate the carrying value there. Carrying value 120,000 minus 54,700, and that will give you an amount of, let me just make sure that I don't do this calculation wrong, minus 54,700. My carrying value is 65,300 rand. And then To calculate your depreciation, it is then 20% on the carrying value. So it is 20% on 65,300 Rand, and that will give you depreciation then of 13,060. 13,060. That is your depreciation on vehicles, 13,060. Diminishing balance method. Okay. We take a look at how to calculate the depreciation now on furniture and fittings. The depreciation on furniture and fittings, as in the question, is 10% per annum on the cost price. So you go to the cost price of furniture and fittings, and your cost price is 65,000 Rand. And you must take 10% on that amount. And that will give you depreciation on your furniture and fittings of 6,500 Rand. Okay, so we have calculated now the depreciation on vehicles to be 13,060 and the depreciation on furniture and fittings to be 6,500 Rand. So if we are now going to record that now in the books of the business, the journal entry to record the depreciation is that you debit depreciation, you credit accumulated depreciation on the vehicles, and you also credit accumulated depreciation on furniture and fittings and we have seen that the accumulated depreciation on vehicles will have to increase by 13,060 as we calculated that. We just change that. That should be 13,060. And the depreciation on furniture and fittings is the amount of 6,500 Rand. Your total depreciation expense is therefore 19,560. All clear on that one? Depreciation expense for the year is 19,560. So we are done with the first part of that question, where they ask you to actually record the information then in the general journal. The second part of this question, guys, the second part of the question is where I am now going to do the statement of profit and loss and other comprehensive income. Statement of profit and loss and other comprehensive income for the year ended. And this financial year ended the 29th of February 2012. Always put your heading on top, guys. Okay. Okay, I am not able to delete that column, so I am just going to leave it as that. And we are only recording into our last column here. Right, guys, the statement of profit and loss and other comprehensive income. This statement starts, of course, with your revenue that you must display. We are working from our trial balance. Your revenue, guys, is the sales amount minus sales returns minus your settlement discount granted. We are looking for our revenue, so it will be 243,645 minus 1,338 minus the 553, and that will give you a revenue, guys, of 241,754. Please, you show all your calculations. Whatever you are calculating, you are showing that calculations in brackets as I have got there for you in the solution. Revenue is equal to the sales minus sales returns minus your settlement discount granted. In this example now, my revenue is 241,754. Less your cost of sales. This is a periodic inventory system. In the periodic inventory system, you must be able to calculate your cost of sales. You must know that your cost of sales is equal to the opening inventory plus your purchases plus your carriage on purchases minus closing inventory. That is how we calculate our cost of sales. So back to our question now, let us take a look at the calculation of cost of sales. Cost of sales is equal to your opening inventory, and your opening inventory, go back to your trial balance, and you will see that your opening inventory, which is inventory on the 1st of March 2011, is 13,550. To that, you must add then your purchases. But when we talk about purchases here, we are looking for our net purchases. Our net purchases is the purchases amount of 154,880 minus purchases returns. Look for purchases returns. Your purchases returns is 245 Rand minus settlement discount received, and your settlement discount received is 155 Rand. We are looking for net purchases. Purchases, the net purchases is equal to the amount of purchases minus purchases returns minus your settlement discount received, and that will give you purchases then of 154,154,480. That is your purchases amount. We are still busy with the cost of sales calculation. Look for carriage on purchases or any other expense that you may incur in getting the stock to you. In our example that we are busy with, we are dealing with purchases, and your carriage on purchases is given to us, and your carriage on purchases is the 660 Rand. We are still busy with cost of sales. Cost of sales is equal to opening inventory plus purchases plus carriage on purchases minus the closing inventory. And your closing inventory is the value of your stock at the end of the financial year. So if you go to your additional information under A, That is where you will get your closing inventory, the value of inventory at the end of the financial year. That is your closing inventory, and then you will be able to calculate now your cost of sales. You've got all the amounts there. Remember, your cost of sales is equal to the opening inventory plus the purchases. Now, when we talk about purchases, we are talking about net purchases. And net purchases is purchases minus purchases returns minus settlement discount received. Add your carriage on purchases and you subtract your closing inventory. You block all of that amounts, guys, and that will give you your, let me just see if I can block that. You block that, and that will give you your amount of cost of sales, and your cost of sales is then the amount of 155,890. And that will give you then your gross profit. And your gross profit is then the revenue minus your cost of sales. Revenue minus cost of sales. That is your gross profit. And your gross profit is now the amount of 85,864. 85,864. We continue with our statement here. After the gross profit, your next heading is other income. We are looking for our other income. Our other income, guys, we have identified commission income and we have got rent income. Those are our two income accounts. And if you want to calculate or you want to see what are your income accounts, always go to your trial balance, and income accounts has got credit balances. Therefore, in your trial balance, look for the nominal accounts with credit balances. And there are only two of them, commission income and rental income. Those are your two income accounts. So we are going to show that now under our other income. First, we will have our commission income. And our commission income is the amount of 15,000. Then we will also have another income, and that is rent income. Remember now, guys, we had an adjustment for rental income. We had an adjustment which was listed as adjustment D. And under adjustment D, your rental income of 3,300 Rand had to be adjusted. You will recall that we spoke about accrued income. There was 1 month's rental that was still due to us. So the amount in the trial balance will have to be adjusted. So we have received 3,300 in our trial balance. That was for 11 months. There is still another amount of 300 Rand due to us. So if you want to indicate what is the rental income for the year, the rental income for the year is 3,600. 3,300 from the trial balance and another 300 Rand from your adjustment, and that will give you 3,600 as rental income. You block, of course, now, guys, all your income. Those are your only two incomes. So your heading there, other income, will then amount to 18,600 Rand, which is the rental, which is the rental income plus the commission income. We continue now, guys, with our statement still. Our next heading is called Distribution, Administrative, and Other Expenses. Distribution, Administrative, and Other Expenses. Remember, when we talk about our expenses now, guys, we've got two categories of expenses. We've got distribution, administrative, and other expenses, and we have got finance cost. Under finance cost, you will only indicate all your interests. So interest on overdraft and interest on loans, that resort under finance cost. All your other expenses you show under distribution, administrative, and other expenses. So if we are saying what is all our other distribution and administrative expenses, guys, in your trial balance, expenses must have debit balances. So go to your trial balance and only take a look at your accounts with debit balances. Nominal accounts with debit balances, and that will give you all your distribution, administrative, and other expenses. Right. The first expense that you will see there, remember your nominal accounts. When we are referring to our nominal accounts, which is all our income and our expenses, they start in your question paper in the trial balance from sales down. Sales, carriage on purchases, commission income, credit losses, those are all our nominal accounts, which is all the income and the expenses. And all of those income and expenses we are going to use when we do the statement of profit and loss and other comprehensive income. So my first expense that I deal with there, guys, is my expense called credit losses. And in my trial balance, my expense for credit losses, we have got as 244 Rand, as it is in the trial balance. My next expense is insurance. But your insurance account, if you can recall, there was an adjustment involved with insurance, because my trial balance say 2,400 is my expense. That is what I've paid for insurance. However, adjustment A tells me that 200 Rands worth of insurance oh guys, I am talking absolutely nonsense. The insurance we have paid 2,400, that is correct. However, there was a 200 Rand payment for the month of March. Now that 200 Rand payment for the month of March is not part of this year's expenses. It is next year's expenses. We have classified that when we did the adjustment, we called that prepaid expenses. So even though we paid 2,400 Rand, 200 Rand of that is for the next financial year. And our expense for the current financial year is therefore only 2,200 Rand. That is our expense for insurance. My next expense is packing material. Next expense is my packing material. Packing material expense, no adjustment, it is still 3,300 Rand. That is my expense for packing material. I go down the list in my trial balance. Purchases and purchases returns I've already accounted for. Rent income I have accounted for that. Sales return I have accounted for. The settlement discount granted and the settlement discount received I have accounted for that. My next expense in my list of expenses is stationery. In the trial balance, we have paid 2,345 Rand for stationery. My adjustment tells me I have still got 345 Rands worth of stationery on hand. So, even though I bought stationery for 2,345, 345 Rand of the stationery is still on hand. So my expense for this year, what I've used up in stationery is only 2,000 Rand. All clear on that one? My stationery expense is only 2,000 Rand. I'm still busy with my expenses. I'm listing this now under my distribution, administrative and other expenses. I have got wages there. The wages amount in the trial balance is 56,775. No adjustment, so that is the expense for the year. My next expense is water and electricity. Once again, no adjustment involved here with water and electricity. And my water and electricity expense is 4,400 Rand. My next expense is my expense for depreciation. Many students forget this particular one, okay? But you must bring into account your depreciation. And we have calculated already when we have done the journal entries for the adjustments, and your depreciation expense will be 13,060, if you can recall, that was the depreciation on vehicles, plus the depreciation expense on furniture and fittings, and the furniture and fittings expense was the amount of 6,500 Rand, giving you a depreciation expense, guys, for the year of 19,560. That will take care, guys, of all my distribution, administrative, and other expenses. I block that now. I block all my expenses together. And if I block my expenses, I add it up, guys, and you must get an amount of 88,479 Rand. 88,479. That is your distribution, administrative, and other expenses. Right, guys, we are still continuing with our statement. Our next item, our next heading, is the heading for our finance cost. And under your finance cost, guys, remember finance cost? This is where we will put all our interest accounts will appear in here. In this question, guys, we have got interest on loan as an expense. Remember, that was the interest that we haven't paid as yet. Interest on loan, that is our last expense, coming from our adjustments, and we have calculated our interest expense to be 3,000 Rand. Remember, in our adjustment, that loan was only taken out for a period of 6 months. And I've showed you the calculation. Your interest on loan is 3,000. That's the only interest on loan or the only finance cost. You put that amount as a total in brackets. It is in brackets because it must be subtracted. And we conclude our statement of profit and loss and other comprehensive income, guys, by indicating there or showing what is the total comprehensive income for the year. And the total comprehensive income for the year, guys, remember now I have put these amounts in bold here. It is the gross profit of 85,864 plus your other income of 18,600 minus your distribution, administrative and other expenses of 88,479 minus your finance cost of 3,000 Rand, and that will give you a total comprehensive income for the year of 12,985. 12,985, guys, and that is our solution to the statement of profit and loss and other comprehensive income. Just one small point, guys. The 12,985, you first calculate that amount and then you do the label. That 12,985 is a positive amount. And because that is a positive amount, that we will label it as the total comprehensive income for the year. Should that answer have been negative, then we would have called it the total comprehensive loss for the year. So you first calculate the amount, and once you've got that, then you can do the labeling. Positive is a profit for the year, and then a negative amount is your comprehensive loss for the year. Okay, guys, that will take care of that first question that we had to complete. That was on page number 3, which was the October-November 2012 paper, where you had to do the journal entries as well as your statement of profit and loss and other comprehensive income. Guys, I'm going to take a 10-minute recess and then I will get back to you guys. Okay, thanks. Bye. Right, guys, good day. Can we get going again? I hope it's going okay so far and that you at least can follow and understand. But remember, important, guys, is that you need to have the notes, okay? The notes will help you a lot. And those of you that still not got the notes, remember you need to email me at FAC1502 S12020@gmail.com, and that will allow you to get or to have access to the notes. Because remember now, guys, this is perhaps the platform that we are going to use for future lectures. So if you want to be on par with what you need to know, that is the way forward. Right, guys, in your notes, I am on page 4. We are going to work through another exercise here, which is the November 2010 question paper. And the November 10 question paper, guys, it's a business called WS Dealers. They give you a trial balance dated the 31st of March 2010. And then they give you some additional information. And then they ask you, go to your required. They ask you, complete the statement of comprehensive income, complete the statement of changes in equity, and prepare a statement of financial position. So as you can see there, guys, they ask you all 3 financial statements. And this question counted 35 marks, which is 35% of your exam. Right, so let us focus quickly, guys, on our additional information that is given to us. And let us first just work through our additional information. We've got 5 adjustments there. So adjustment number 1, I am on to adjustment number 1. In adjustment number 1, they state the following. The entity took out a fire insurance policy on the 2nd of January and paid the annual premium of 2,880 for the coverage until the 31st of December 2010. Now, our financial year has ended on the 31st of March, and you have paid up until the 31st of December. So for that entire period, April, May, June, July, August, September, October, November, and December, you have paid in advance for a 9-month period. Because even though you paid for 12 months, only January and February and March is a payment within this financial year. The other payments, guys, is for the next financial year. And therefore, the insurance will now fall in the category of prepaid expenses. That is prepaid expenses. So if you are going to record that now, let me just quickly show you the calculation there for your prepaid expenses. There is an annual premium of 2,880. And of that premium, 9 months. So you take 9 divided by 12. Of the 2,880, 9 months of that is prepaid expenses. So your prepaid expenses is the amount of 2,160. Okay? Even though you paid 2,880, 9 months of that payment is for the next financial year. And that 9 months of the next financial year, we will classify that as prepaid expenses. This next adjustment, adjustment number 2, remember now our approach. Our approach is that we first just go through all our adjustments. The second adjustment tells you that at the end of the financial year, on the 31st of March 2010, stationery to the value of 1,500 Rand was still on hand. Remember, that is the adjustment where we spoke about the adjustment called consumable inventory on hand. So go to your stationery and you will see that stationery has got a balance of 2,300 Rand in your trial balance. That means that we have paid already 2,300 Rand for the stationery has been paid. Your adjustment tells you 1,500 of that stationery is still on hand. The two accounts affected here will be your inventory of stationery and the stationery. Inventory stationery is an asset that we will show in the statement of financial position, but the stationery on hand of 1,500 Rand, that 1,500 Rand will impact on our stationery expense. So even though we bought stationery for 2,300, 1,500 of that is still on hand. So if you want to see what is your stationery expense will be 2,300 minus the 1,500. But we'll talk about that when we come down to the statement of comprehensive income. Right, next adjustment, adjustment number 3. Salaries to employees of 4,500 was still outstanding. So we did not pay 4,500 Rand of salaries. And because we didn't pay our expenses, it will fall under the category of accrued expenses. So adjustment number 3 is accrued expenses. How will this impact now on our financial statements? If you go to your salaries and wages account, you will see that salaries and wages is 34,800 in the trial balance. The 34,800 in the trial balance is actually the amount that you have paid already. There is a further amount of 4,500 that we did not pay. So our expenses for salaries and wages will actually increase when we do the statement of comprehensive income. Guys, I'm still explaining all the additional information to you, and I'm also explaining to you how the adjustments will impact on my financial statements. I'm on to number 4. A tenant moved into the office space that was available for rent, and the tenant moved in on the 30th of November 2009, and he prepaid the rent for 12 months. So the 30th of November 2009 means that he must only pay for December, January, February, and March. So he must actually only pay for 4 months, but he has paid for 12 months. And that will fall under the category of income received in advance. The business has received too much money. We received rental for 12 months. We only should have received the rental for actually 4 months. 8 months is therefore received in advance. We call that income received in advance. So in your statement of profit and loss and other comprehensive income, your rental income will have to decrease. And in your statement of financial position, income received in advance falls under the category of current liabilities. Remember, guys, each adjustment will impact on the statement of comprehensive income as well as the statement of financial position. The last adjustment, guys, number 5. The fixed deposit was invested a few years ago. You must make provision for the interest on the investment, and the interest on the investment is 12% per annum. Even though the fixed deposit was invested some time ago, we are only interested in what is the interest on fixed deposit for the year. Because remember, we only work with income and expenses for the year. So let us take a look at our fixed deposit. We have got a fixed deposit, and our fixed deposit, guys, is the amount of 80,000 Rand. And on our fixed deposit, we must get an interest now of 12% per annum. So if you work out 12% on the 80,000 Rand, you will see that your interest on fixed deposit is that you are supposed to receive is 9,600 Rand. That is the interest that you are supposed to receive. Now go to your trial balance. And in your trial balance, you will see that you have actually received already an amount of 8,800. So let me just quickly show you that calculation. The interest on fixed deposit that you are entitled to, 80,000 Rand times 12% of that amount. So you are entitled to 9,600 Rand. Of that 9,600 Rand, 8,800 Rand was received already. That amount is in the trial balance. You are supposed to receive 9,600. You received 8,800 Rand already. So there is still 800 Rand due to you. That 800 Rand that is due to you, we call that 800 Rand now accrued income. That is called accrued income. And remember now, accrued income is an asset in your statement of financial position. Right, guys, that will take care of all our adjustments. We've gone through all our adjustments there, and now we are going to log in and we are now going to do our financial statements. The first financial statement that we are going to attempt here, guys, is the statement of profit and loss and other comprehensive income for the year ended the 31st of March 2010. Remember, your required is on page 5, what you must do over there. So when we do our statement now, guys, we will start off with our revenue. We have got no sales returns. We have got no settlement discount granted. And therefore, your revenue is the sales amount of 208,550. That is your revenue amount. You subtract your cost of sales. Now, just a word of warning over here, guys. In this exercise, you are presented with information from a business that operates a perpetual inventory system. In a perpetual inventory system, remember now, cost of sales is given to you. The exercise we've done before this was the periodic inventory system. And in the periodic inventory system, you must calculate cost of sales. And to calculate cost of sales, just remember that cost of sales will be the opening inventory plus purchases plus carriage on purchases minus closing inventory. But that is in a periodic inventory system. The question we are dealing with now, guys, is a perpetual system. And in a perpetual system, cost of sales is given to you. So in your question paper, you will see that there is an account for cost of sales. And that tells you that we are dealing with the perpetual inventory system. Back to the question, guys. Revenue is given now, 208,550. Our cost of sales is given to us, and our cost of sales is the amount of 114,000. Revenue minus the cost of sales of 114,000 will give you a gross profit of 94,550. That is my gross profit. Revenue minus cost of sales. Remember, normally you can have under revenue, that revenue is sales minus sales returns minus settlement discount granted. But in this question, there was no sales returns and there was no settlement discount granted. Your cost of sales, you can have cost of sales minus settlement discount received. But in this question, there was no settlement discount received. So your cost of sales is the amount given as 114,000. Subtract the two, guys, and that will give you a gross profit amount of 114,000 rand. You add now your other income. A heading, guys, for other income. Once again, guys, if you want to know your other income, look in your trial balance. Look in your trial balance for your accounts with credit balances. And our nominal accounts with credit balances, there are two of them. Interest on fixed deposit and rental income. So let us first of all start with the rent income. The trial balance amount of my rental income is 3,600 rand. But remember, there was an adjustment. There was an adjustment that impacted on the rental. I am referring to adjustment number 4, where in adjustment number 4, the tenant moved into the office space from the 30th of November. He is liable to pay for December, January, February, and March. He must pay for 4 months only. However, he paid for 12 months. So there was an amount of 8 months in which he has paid in advance. And we call that income received in advance. So the 3,600 he paid for the year. If you break that down per month, you take the 3,600, you divided it by 12, and he is actually paying 300 rand per month. If he has paid for 8 months in advance, there was actually income received in advance of 2,400 rand. is 300 Rand per month times 8 months. 8 months of that money is for the next financial year. So the income for the current year for rent income is 1,200 Rand. Our next income account is our account called interest on fixed deposit. And we worked this out already. The interest on fixed deposit, your trial balance amount is 8,800 Rand. But remember, there was an amount due to us, which we have classified as accrued income. And that was 800 Rand, resulting in interest on fixed deposit of 9,600 Rand. Right? 8,800 Rand in the trial balance, and we have worked out that 800 Rand was accrued income. Those are our two income accounts. So we block that quickly, guys. Add it up, and our income amount is 10,800 Rand. That is our amounts for other income. Just want to bold that. In the statement, guys, we are still busy with the statement. The next heading is, of course, distribution, administrative, and other expenses. Remember now, once again, guys, as far as our expenses is concerned, we will have, as far as our expenses is concerned, we categorize them into two groups, guys. Either distribution, administrative, and other expenses, or finance cost. And finance cost is only for your interests. So let us go through our information, guys, that we have here on our list of our expenses. And remember, expenses has all got debit balances. So go to your trial balance, and in your trial balance, the nominal account with debit balances, those are classified as our expenses. The first expense that we have there, guys, is our adverts. And our expenses, guys, for the adverts was 800 Rand, no adjustment, so the expense is still 800 Rand. Our next adjustment is, or our next expense is salaries and wages. And guys, as you can recall, there was an adjustment with salary and wages. That was adjustment number 3, where 4,500 Rand of the salaries was not paid. Therefore, if we are going to show our expense for salaries and wages, we have paid already salaries and wages, 34,800 has been paid. That amount comes from the trial balance. According to our adjustment, there is still 4,500 Rand that we didn't pay, and that will result in an expense for salaries and wages of 39,300 Rand. That is our expense then for salaries and wages. Back to our list of accounts, all of our expenses. Our next expense is called admin expenses. On our trial balance, we will have administrative expenses of 2,600 Rand. Our next expense, remember there was no adjustment with admin expenses. Our next expense is repairs and maintenance. No adjustment involved. The trial balance, say, repairs and maintenance is 3,600 rand. Still with our list of accounts, guys. Our next account is water and electricity. We haven't got any adjustments on water and electricity. And the amount in the trial balance, what we have paid for the year, water and electricity, 8,650. Our next expense is insurance. As far as our insurance is concerned, guys, there was an adjustment involved with insurance. The adjustment involved with insurance, guys, is under number 1, where we have calculated that we have paid 2,880 rand for insurance. But that 2,880 was for the entire year up until the 31st of December. With the financial year that is ending the 31st of March, we have established already that 9 months of that payment was actually for the next financial year. And that we have labeled as prepaid expenses. So we have, and I've showed you the calculation before, we have actually paid 2,160 rand too much. So in your statement of profit and loss and other comprehensive income, even though your insurance expense is 4,200 rand, we will have 2,160 is for the next financial year. So our expense for this year is only the amount of 2,040. All clear on that one? 2,160 was paid out for the next financial year. So our insurance expense for the current year is only 2,040. Even though we paid 4,200, because 2,160 is a payment for the next financial year. Our next expense, guys, I'm just going down the list of expenses, is our stationery expense. And once again, guys, when we speak about our stationery expense, there was an adjustment involved with stationery. Remember, adjustments will change the information from the trial balance. So the stationery expense in the trial balance is 2,300, which means that we bought stationery for 2,300 rand. But of that 2,300, your adjustment tells you that you've still got 1,500 rand on hand. So for the purpose of the statement of profit and loss and other comprehensive income, you will say that even though you bought stationery for 2,300 rand, 1,500 rand of that is still left at the end of the year, which will result in a stationery expense of only 800 rand. Only 800 rand has been used up as stationery. Our last expense is depreciation. And your depreciation expense is given to you as 4,000 rand. Okay, guys? They were quite easy for you in this question paper. They didn't ask you to calculate the depreciation because they know that many of the students are struggling to get that. But I'm sure that you guys have all of this, you've got it under control. The 4,000 rand of depreciation was given to you. Right, guys, that is the last expense. Note that there was no finance cost, so we're not going to show the finance cost. You will add up all your expenses now, and if you add up your expenses, you will get 61,790. Add up all your expenses, and your distribution, administrative and other expenses will now amount to 61,790. You can close off now your statement of profit and loss and other comprehensive income by calculating the total comprehensive income for the year and the total comprehensive income for the year, remember now guys, it is the gross profit plus your other income minus your distribution, administrative and other expenses. It's the gross profit plus your other income minus your distribution, administrative and other expenses, and that will give you a total comprehensive income for the year of 43,560. 43,560 guys, and that is the answer then for the first section, which is then the statement of profit and loss and other comprehensive income for this year. In this exam, this was the 2010 exam guys, and that statement has counted 17 marks. Right guys, that is the solution to 4.1 for 17 marks, where you had to complete the statement of comprehensive income. Right guys, we're moving on to our next statement guys. We're moving on to our next statement, which is under, if you go to your required, on page 5 guys. I'm just removing all of that quickly, where they ask you to complete the statement of changes in equity. Statement of changes in equity for the year ended the 31st of March 2010. Remember, when we talk about a statement of changes in equity guys, we want to know in your equity, and we are doing the books of a sole trader here. In a sole trader, equity is equal to the capital. So we want to know how the capital has changed from the beginning of the year to the end of the year. And that is why we prepare a statement of changes in equity. We want to see what was the value of equity at the beginning of the year and what is the value of equity at the end of the year. So I'm taking you guys, you can always refer back to your notes of lecture 4, of course, because in lecture 4, I've given you the formats of the financial statements. So this statement starts, guys, with the capital balance at the beginning of the year. And the capital balance, guys, at the beginning of the year is what is reflected in the statement of, or in your trial balance, and your amount of your balance at the beginning of the year is 207,300. That is the value of your capital. Capital balance, guys, at the beginning of the year is therefore 207,300. That amount, guys, of course, will increase due to the total comprehensive income for the year. And the total comprehensive income for the year is the amount that we have calculated in number 1, in 4.1 of this question, which was the total comprehensive income for the year as calculated in the statement of profit and loss and other comprehensive income. The drawings for the year will decrease the equity. So go to your drawings in your trial balance, and the drawings for the year amounted to 23,000 Rand, which will decrease your equity. And your final answer for this statement of changes in equity is called capital. The balance at the end of the year. And the balance at the end of the year is the balance at the beginning of the year of 207,300 plus the total profit for the year, the total comprehensive income for the year, 43,560. Minus your drawings of 23,000. And that will give you a balance at the end of the year of 227,860. And that is the solution then, guys, of the statement of changes in equity. Remember, a statement of changes in equity, we want to know what's the capital balance at the beginning of the year. So we started with 207,600. We want to know what's the value of your equity at the end of the year, and we have calculated that to be 227,860. The capital balance at the beginning of the year plus the profit minus the drawings will give you the value of equity at the end of the year. And that is the solution to 4.2, which has counted 3 marks there. Right, guys, we are on to our last statement now. We are on to our last statement. It looks like from the comments that I get here, guys, I can see that you guys are doing well. There has been a request for you guys to have the notes. So let me just put up that email address once again for those of you guys that is still waiting on the notes or refuse to send an email. Remember, if you don't send an email, you are not going to get the notes. So let me just indicate to you once again, if you want to get the notes, the email address FAC1502 semester, just S1 of 2020 at gmail.com. Okay, guys, because it could be that we are going to have this forum as the only forum for the next few weeks in which we are going to communicate information to you, since the access to the learning center, you guys will not be able to attend these lectures here. So if you want to receive the notes, guys, this is the email address that you must use to send to me so that I can forward you the notes. The last part of this question, guys, is 4.3, and under 4.3 they ask you now to do the statement of financial position. Remember, a statement of financial position, guys, remember it is only the assets, the equity and the liabilities that is displayed in a statement of financial position. So a statement of financial position is a summary of your assets, your equity and your liabilities. So let us start with this statement. And once again, guys, in lecture number 4, I had given you guys the format of that statement. So we are now going to apply that statement now And let me start with that statement now. So we are doing the statement of financial position. As at the 31st of March 2010. The top part of that statement is where we are showing all your assets. And we're first going to work with our non-current assets. Remember, guys, the format is absolutely important. So you need to show and you need to know the format of your financial statements. So under your non-current assets, guys, remember your non-current assets will be your property, plant and equipment. Under property, plant and equipment will resort your buildings, your land or land and buildings, your equipment, your vehicles, your furniture, machinery, that will all form part of property, plant and equipment. So property, plant and equipment in this example, we have only got office equipment. And the office equipment, you must show the carrying value of your office equipment. And the office equipment carrying value will be the cost of 24,000 minus accumulated depreciation of 8,400 Rand. And that will give you property, plant and equipment, an amount of 15,600. That's the value of your property, plant and equipment. Also under your non-current assets will fall your fixed deposits. And in this question, we've got a fixed deposit. And our fixed deposit is the amount of 80,000 Rand. So property, plant and equipment and your fixed deposit, that will give you the value of your non-current assets. Block that, guys. Add it up. And the value of your non-current assets is therefore 95,600. Non-current assets, that is the value of your property, plant and equipment, as well as your fixed deposits. Still continuing, guys, here. Our next heading is the heading for our current assets. Current assets, remember guys, there are 4 categories for your current assets. Your current assets will consist of inventory, trade and other receivables, prepaid expenses, and cash equivalents. Important, guys, you must know your format. So, as far as our inventories is concerned, your inventory will consist of your closing inventory, which is displayed in your trial balance, where your closing inventory was 22,000 Rand. That's the value of your stock at the end of the year. But if you want to I think we're back on.
There we go.
Okay.
Go.
You can go. Right, guys. Just sorry there. Apologies for the short interruption, but we are back on it. Okay. I was explaining to you guys the importance of your formats. You need to know your format, okay? So under your current assets, guys, we are on to our first item, which is the inventory. The inventory consists of your closing stock as well as consumable stock on hand. Now, from your adjustment, you will recall that there was 1,500 Rand of stationery that was still left at the end of the year. So if you want to show what is the value of your inventory, you've got stock on hand and you've got stationery on hand. And that all fall under the category of inventory. So when you do your statement of financial position, you must show your inventory now at 23,500 Rand. That is the value of your inventory. Your trade and other receivables, which is our next category, trade and other receivables. Okay. Your trade and other receivables, guys, will be the amount of, if you go to your trial balance, you will see that your debtors control. Now remember, debtors control, this is quite an old paper. This is 2010. When you are going to write exams now, guys, it will not be called debtors control. They will stand trade receivables control. It is just a name change, but you will still handle it the same. So if you are going to show your amount of trade and other receivables, it will be your trade receivables, which in this exercise is still called debtors control. And your debtors control is 21,300 minus your allowance for credit losses of 1,200. Once again, guys, it comes down to the format. You must know the format that we discussed under lecture number 4, where your trade and other receivables, if you want to show trade and other receivables is your trade receivables, which is your debtors, minus allowance for credit losses, plus your accrued income. So back to the question over here now, guys, the question that we are doing. You will have trade and other receivables will be the 21,300 from debtors minus 1,200 Rand from your allowance for credit losses, plus there was 800 Rand of accrued income. And that will give you trade and other receivables of 20,900 Rand. 20,900, and that is your trade receivables. Prepaid expenses, guys, from your adjustment, you had prepaid expenses of 2,160. Okay, I am referring to that insurance under adjustment number 1, where insurance of 2,160 was paid in advance. The last category here, guys, will be your cash and cash equivalents. And remember now, when we talk about cash and cash equivalents would be the bank plus the petty cash plus the cash float. That makes up cash and cash equivalents. In this exercise, we have only got a bank and we have got petty cash. Our bank amount is the amount of 102,700, and your petty cash is the amount of 2,000 Rand, resulting in cash and cash equivalents of 104,700 Rand. Block all of those items, guys, because that will now represent all my current assets. It's the inventory, trade and other receivables, prepaid expenses, and cash equivalents. Add all of that, and that will give you a total amount of current assets, 151,260. Current assets, the 4 items added together, 151,260. The top part of your statement of financial position, which is your asset section, we add up now, we calculate what is our total assets, and your total assets is now your non-current of 95,600 plus your current of 151,260, and that will give you total assets 246,860. And that is the top part of your statement of financial position. Total assets, and your total assets amounted to 246,860. So just to summarize, guys, the top section, which was just your assets consist of non-current assets and current assets. Your non-current, property, plant and equipment, and your fixed deposits. Under your current assets, you've got those 4 categories: inventory, trade and other receivables, prepayments, and cash equivalents. And the top part of your statement of financial position, which is your assets section, you have calculated now what is your total assets. We take a look now, guys, at the bottom section of your statement, and the bottom section of your statement is called equity and liabilities. Equity and liabilities. So we first of all take a look at our equity. Bottom section is called equity and liabilities, and we first take a look at our equity. Equity consists only of our capital. That is our equity. So your equity, guys, is your amount of capital. You want to know what is the value of capital at the end of the financial year. And capital has been calculated already. You have calculated the capital. The balance of capital at the end of the financial year has been calculated in your statement of changes in equity. So go to your statement of changes in equity, and that is where you will find your capital balance at the end of the year. And your capital balance at the end of the year was 227,860, which was the solution for question number 4.2. So let me just put in there 227,860. You block that amount. That is the amount of capital, but that is then also the amount of equity. Next we go, guys. Our next heading is for your liabilities. You get 2 kinds of liabilities. You get non-current liabilities, which is your long-term liabilities, which can be in the form of a loan perhaps. And you get current liabilities, which is your short-term liabilities. In this question, there are no loans. Therefore, there's no non-current liabilities. So we go straight into our current liabilities. So our next heading is for your current liabilities. Under your current liabilities, guys, the first category that we will have here under your current liabilities will be for trade and other payables. Trade and other payables you will show over there, and your next category is income received in advance. Your trade and other payables, guys, will consist of, first of all, your trade payables. Once again, remember this is quite an old question paper, so they will call it creditors control. But in your new question paper, it will be called trade payables control. And your trade payables control is the amount of 12,100 Rand. Then you will recall from your adjustments, there was still salaries outstanding. And the salaries that was outstanding, remember we called that accrued expenses of 4,500 Rand. And that accrued expenses, we will now list as part of your trade and other payables. So your trade and other payables will consist of your trade creditors or your trade payables, plus your accrued expenses, and your accrued expenses is the amount of 4,500 Rand, which will give you trade and other payables here, guys, of, I've got 16,600 Rand. That is your trade and other payables, 16,600. Your income received in advance is coming from your adjustment number 4, where remember the tenant has paid the rental for a period of 12 months, but only 4 months was of this year. And therefore your income received in advance, we have calculated to be 2,400 Rand. That was the amount of income received in advance, which you will show separately. You block that now to give you a total of your current liabilities. Add the two, and your current liabilities is the amount of 19,000 Rand. So the bottom section of your statement of financial position, you will have equity of 227,860. You will have current liabilities of 19,000 Rand. The bottom section of this statement is then called total equity and liabilities. You add your equity, you add your total liabilities, which is the 227,860 plus the 19,000, and that will give you total equity and liabilities of 246,860. Which is then the bottom section of your statement of financial position. And by doing the statement of financial position, you have actually proved now that your assets, which was 246,860, is equal to your equity and liabilities of 246,860. And guys, this was a complete question where you had to do all three financial statements. Guys, that's the end of my session. I hope that you guys enjoyed the session and that you could follow. Remember, this is the first one. There were a lot of teething problems still, but we hope to address all of that. If you've got any queries, you can email me, or you can just add it onto the comments over here, and then we will see how we can improve on our system or rectify some of the stuff that we had wrong. Okay, so
no, sir.
Yes, Fatima.
How do you add yourself onto the comments?
We will leave a comment for you on how to do that. Okay, somebody will respond to that, Fatima, and then we can then you can just add yourself onto the comments, and then we will be able to see your comments then. Okay, guys?
Thank you, sir.
Guys, that's the end of my session. I hope you guys enjoyed it. And as we said, that just wait for your confirmation and more updates as to when our next one will be. Enjoy the rest of the day, guys. Good day. Bye.